Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Eric Francom. Now, Eric started his career as a dentist, during which time he successfully owned and operated 4 dental practices that he in turn sold to a private equity group. Now, after increasing his net worth 4 times since the sale of his dental practice and increasing his passive income from 7,000 to over 6 figures per month, Eric wanted to share his knowledge and teach others on how to do the same. Eric has now diversified his wealth in investments in commercial real estate, private equity, and VC funds, and helps advise others on how to do the same. And so with that, guys, it's an honor to welcome Eric Francom to the show. Eric, how you doing today?
Great. How are you doing, Kevin?
I'm doing great and excited to have you here. Excited to peel back the onion a little bit, get a better understanding of who you are, your business, and what it is you do. So again, that was an incredibly brief introduction I just gave you there. So I'm going to pass it back to you and just kindly ask that for those that aren't familiar with you and your story, let's back it up a little bit and tell us a little more about yourself and fill in some of those blanks there, if you would.
Yeah, sounds great. Well, I've always been business oriented. My dad was a small business owner, and I thought I wanted to be a physician. And I started interviewing the dentists as I was, doing that progression, and they seemed to be a little bit more business oriented, having more entrepreneurial freedom. And I thought, this is a way I can kind of be a doctor and a business person at the same time. And as I went through school and everything, I was doing sales and that going through school. I really enjoyed it. Grateful for the opportunity to be able to be educated for an extra 4 years. But then I got out and I had all of this debt on me, and you get through that finish line of, hey, I've been going through school forever, to, hey, wow, now all I have to do is pay this back, and it's going to take me 30 years. And the debt kind of I had an unhealthy relationship with it, which kind of worked to my favor eventually. But so as I graduated with this, debt, I mean, it can be $500,000 or more to graduate dental school these days. And, then you buy a practice for another million, or, a building that goes with it. You're talking a few $1,000,000 in debt when you're used to living like a student. And so I was just really grinding it out, just using my own hands and my own, faculties to try to get growing and to get out from under that debt. And I was pretty miserable. I was unbalanced. My health was kind of suffering from it just because I wasn't balanced. I wasn't taking the vacation I should. My relationships were suffering. My poor wife was suffering. We just started a new family. I decided, hey, this isn't going fast enough. The logical thing to do, why don't I start another practice, and then another and another? So they say that 2 times the practices can be 4 times the headaches. And I ended up having these 4 practices thinking, hey, maybe I'm just going to go to 50. This is my new thing, and I'm going to go change the world. And, basically came to a hedge where I thought, hey, I want to spend a lot more time with my family. And there's a better way for me to work with my mind than just with my hands. And, I was going to sell off one of my practices, and I got an offer I couldn't refuse for the 4 of them. Thought, okay, hey, maybe I'll just pause here. I'd already been investing and teaching some private clients how to invest to get passive income. I got to the point where even as a high producing dentist, my passive income, overtook my active income. And I just hired some of the best coaches in the world to really take me to the next level in alternative investments in real estate and venture capital, private equity. And, it's just a game now. I just really enjoy it. I love teaching. I love helping people. By leveraging, I've been able to find deals that have a protected downside, but a huge upside. And I really enjoy what I do now. So it's been a great pivot that I wasn't expecting.
Okay. No, I appreciate that. And, what I love to find out is, that first practice, when you made the decision, you're grinding it away, you had an unhealthy relationship with the debt that you were in after that first practice. And ultimately you made the decision to open up that second practice, and then a third, and then a fourth. I mean, what was the idea that, once I get to a certain scale, I'll be able to bring in, some additional management and oversight and maybe free myself up a little bit? I mean, what was the ultimate objective outside of just making more money? I mean, what were you hoping to achieve by opening up that second location?
Well, like I've always been a sucker for a deal or value, kind of at any cost, whether it's the right decision or not. Like the old joke about the person that buys the big value bag of dog food that doesn't even have a dog. And so I guess, the value of me working there, it wouldn't be so I could work less. It would be maybe so I could work more efficient. I could teach other dentists, which I did enjoy. I liked to manage, but I was practicing, 50 hours a week as a practicing dentist, and you can't run a company when you're doing that. It's very hard on your body, and just you don't have the time and the bandwidth. So yeah, I had planned on scaling it and scaling it more, but I didn't want to leave the chair. Smartly, I would have done that more and taken at least half of my time, to just strictly work on the business instead of in the business.
Mhm.
But the goal sometimes, what's the goal of a dog chasing a car? It doesn't know. And then it sometimes catches it and it's like, well, now what? And when I reached pure financial freedom, it didn't really change anything for me. It was just like, okay, this is just still, the game. I'm wanting to help people, both my employees first, and then, my patients and that kind of a thing. And, I'm able to help people in a little bit different way now. So yeah, I think that starting with the end in mind really matters. And that's why my group called Infinite Freedom is about achieving financial freedom, but also using that freedom to have pure freedom in your relationships, your adventure, your higher purpose, whether it's philanthropy, whether it's, a balance of just all things good that continue even after we pass on. We can have portfolios and things that continue to pay dividends and make the world a better place, even after we're gone.
So, a lot of folks that might be listening, maybe they're caught in their daily grind of their own business, or maybe they're a W-2 employee, they're a high earner, but like they're they're working a lot of hours, 60, 70, 80 hours a week, maybe more than that.
Yeah.
And again, just juggling a family at home, and just sometimes struggling to find the time, even if they want to do additional things or find a way out, right? Like kind of dig their way out of this hole they found themselves in. Even though they got a lot of money, now what to do with it, right? Like it takes time to educate yourself and to read books and to hire coaches like you had suggested that you did. And so help us understand what that evolution looked like for you. At some point, there was a catalyst that really pushed you to seek out alternative investments. Obviously, you're probably doing quite well then at the dental practices that you were running, and needed to find a safe home to help you continue to grow your wealth outside of the dental business itself. So, what did that look like? What did that path look like, or the journey look like for you?
Sure. Well, I'm a bit of an extrovert myself, and it's kind of funny. What do I do now? People tell me, "Man, I just love your energy." I hear that a couple times a week. I never heard it as a dentist. Kind of being that entrepreneur, you can't be too excited. I felt like I had to subdue my real self because I have sharp instruments in my hands and I don't want to freak people out. And I have to be, just very calming. So
Yeah,
I
yeah.
think sometimes
The
just
over
getting,
hyper dentist with the drills.
I know,
Yeah,
right?
that's
Hey,
a little
let's get it
freaky.
going. So, I think that there is something to be said about working with the tide, like working in our true zone of genius, as Gay Hendricks and others have said. Your true, superpower and the things that you do well. Try to find somebody that complements your weaknesses rather than trying to make your weaknesses strengths. And I was trying to make my weaknesses strengths a lot. There was one, you asked about a crux moment. It sounds funny because it is at a Tony Robbins event that he was speaking to just a bunch of dentists. I didn't go to specifically see Tony Robbins. I was just there for the event. And he did say something as we were all jumping up and down, filled with energy, the way in all Tony Robbins style. But he did say something that did change my life. And he said, I don't have to work. I I work harder now than I ever did before, because when you work when you don't have to work, it comes with a different meaning that those who haven't done it can't even fully understand. I thought, okay, that is my next goal. That's where I said, okay, I'm getting to complete financial freedom. And even when I was at the crux of selling my practices, I thought, hey, I could either do 10 times bigger than I am right now, or I can kind of lock in this freedom and more protect this financial freedom that can sustain perpetually. And I chose to do that, and I don't regret it. And maybe I would have had a jet or something like that if I continued to go on, but at what cost? I'm able to spend a lot more time with my family. I've been able to spend time, just traveling the planet, meeting wonderful people. And so, yeah, now I get to work, and I'm helping other people to be able to get to work, not just have to work.
That's fantastic. And I want to learn more about that piece of it. Just one more thing regarding the dental practices. Just curious, as to the process of selling to a private equity group, really positioning those assets to to sell off to a private equity group, and the nuances or any of the lessons learned that came along that journey. Anything that you'd like to share?
Yeah, I wasn't prepared to sell. I would just say be prepared to sell at any time. A lot of times entrepreneurs and investors tend to just pour everything back into the business without really knowing why. And we don't tend to take care of ourselves or pay ourselves, and we tend not to celebrate wins as much as we should because we're just moving on to the next thing. So I think that would be the biggest thing that Sean Acor talked about, the happiness advantage, and a Harvard professor talking about positive psychology and how that helps our health and our wealth and our relationships. We're not happy because we have those things. We have thriving relationships and wealth and health because we're happy. So, just kind of being happy where you are, enjoying the journey, not just waiting till you're out from under debt to start enjoying the process. I think, just the paradigm shifts really made a big difference for me because mindset is everything. And my book that's coming out pretty quick by the same name, Infinite Freedom, I mean, that's number one. Mindset is the foundation. And we are just kind of graduating from the Maslow's hierarchy of needs of getting your shelter and your food and water covered to getting to that, full ascension of helping people and the higher things on the pyramid as we get those basic needs covered, and then also have some free time to focus on those important things.
I love it. I love it. Now let's talk about your life today. Looks very different than what it did when you're in the dental practice. Let's talk about what, where are you spending your time, your focus, your energy, efforts as it relates to investing?
Yeah. So, I mean, as far as my time goes, I just love what I do. So I have to consciously stay congruent to my brand, because if I'm not careful, I'll work all the time. I talked to my wife and my brother. He's a physician and he works an awful lot of hours. And my brother asked me, "Hey, do you work more now than you did before?" I said, "No way. I worked a ton more before." And then I thought about it a little bit and I asked my wife and I said, "Do I work more now or then?" And she said, "You work way more now." I was like, "Wow." But I enjoy it. It's my thing. So I have to consciously make sure that I'm not delaying spending time with my kids and vacations and letting life pass me by, that I'm going to the lake and boating and connecting myself with the things that I do love, nature and just being out in the sun and getting exercise. So I do spend more time with my kids. I help them get ready and I drop them off for school and, do my son's hair in the morning that just, I don't know. I have a blast. He just turned 3 years old and I'm just glad that I spend so much more time with him than I did with the others. But then it's all about the people. Everything's about the people. So the reason that I'm blessed to have such exclusive investments is because of the network that I have been able to build, connecting with awesome people like yourself and others that just have a real zone of genius that I can add my superpower to. And the investors that follow me, they can go to the great things that other people are creating. And it's just a big synergy. It's a win-win-win all around. So I spend a lot of time networking and dissecting deals. I also, get people that know more about specific things in real estate or medicine or whatever I'm investing in to help me with that. So I'm not standing on an island by myself. But yeah, I get to, just talk to my friends and I create great business deals with my friends. And as an investor, I tell my following, we get paid to make the world a better place. So I'm finding things that make the world a better place. We get to invest in it. We get to make money as we do that. If a idea doesn't make money, that typically dies. And so it creates it to be a win for the investor, a win for the creator, and a win for the end user.
No, I love every bit of that. And speaking to in the beginning, with your introduction, we talked about the diversity of nature of your investments, going from commercial real estate, private equity, VC funds, what have you. Given that this is a commercial real estate show, would love to get an idea of getting, let's talk about commercial real estate for the period of time. And I would love to learn more about some of the private equity deals and the VC deals that you've got your sights on, and what interests you, what not. But commercial real estate wise, are there certain asset classes that you tend to invest in? Are there others over others? Are there particular markets? Again, just help us better understand that side of your business, if you would.
Sure. I guess I've always been a little bit of a contrarian. I look for the deals where other people are not. So I've been investing in some commercial spaces, and a lot of people have been afraid of that space, but there still are niches and really good deals, even with the changes in COVID and different things. And, there was a commercial building that's just local to me that it was at the gym where I would work out at. And I saw that they were selling this complex, but the seller wasn't very motivated. And of course that changes over time, but they had a big warehouse building that was just sitting there. It was essentially a condemned building. It was like 35,000 square feet. And they didn't want to sell the frontage part that had all the strip center without selling that big building that nobody knew what to do with. But after just running the numbers, it cash flowed fine if I just let that building sit there. So I
Hmm.
thought, okay, well, it's basically a free building, and it was. And I got the loan, and I didn't even have to get that building collateralized. I literally had it just on the one. So then I was able to take a cash out refinance loan on that building. I'm getting, another tenant that's going to be in there. It's a lot of work as far as, getting it fixed up, but it's going to be a cash flow dream. And so that's an asset class that worked out just fine. Another one is self-storage. There are some really hot niches, and just as a kind of a natural pessimist of worrying about the shifts in the market, I'm always looking for the things that have the obvious value. I've not spent as much time in single family real estate. I've sold those off a few years ago, and but the self-storage is not correlated and almost a little bit inversely correlated to the greater market as a whole. So, if people are shrinking down to their houses, they're selling their second house, or they're moving in with their mother-in-law or whatever it is, sometimes they'll need a storage shed to build. And there's also good niches where you can have new flourishing growing areas that already need a self-storage area. So there are some projections of 40+% IRR that are 50% loan to value ratio, things that will pay dividends and be a quick turnaround in a couple of years, that have great tax advantages as well. So those are two classes that I've liked, and I understand a little bit better than class A and B multifamily.
Yeah. And so that the first example you gave, that was a retail strip center, right? Just happened to
It
have
is
that 35,000 square foot,
retail
empty
and
building in
office
the back.
space. Yes.
Have you figured out a strategy for the empty building out back? I feel like that's where probably a good bit of value add. It's hiding. It's just, what to do with it.
Sure. I might get myself in a little trouble here, but here we go anyway. So yeah, basically the gym, I'm taking it out. I'm going to essentially pivot that gym over into the big space. And I already have, things almost to the finish line with that. And that's really going to change things. It's going to be awesome for them. They're going to have a big, amazing gym. And then I'll be able to, it'll be a lot easier for me to rent the forward spaces that are there. The gym members aren't going to have any problem going to it. So yeah, basically I created something out of nothing. I mean, because it sat vacant more than 6 months, I had the fun joys of having to get, fire suppression and fire lanes and all sorts of things that this building just was not built for. It's like a ship in a bottle. But even so, it is a cash flow dream that's ready to turn the corner.
Fantastic. And are most of these opportunities, are these things that you're finding on your own? Are these deals that you're partnering with others on, that they're bringing it to you, and you're basically JVing, bringing equity and what have you? I mean, what is your typical scenario?
Yeah.
At least in the commercial real estate world.
Well, that's a good question. And there's what I plan on doing and then what I end up doing. And on paper, it certainly makes sense to partner with somebody that knows a lot more about something than you do. And I hadn't done a project like that before, and I was kind of looking for a partner, but I didn't have the one that could add the value and still be, a good partner. So I just did it by researching it out. I got a great broker who I hired to also be my property manager. I did it for myself for about a year, and that helped me to kind of learn by getting thrown in the deep end as well. And yeah, I'm not afraid to call on some of my friends and connections to ask them their thoughts. Just even asking just attorneys that are obviously a wealth of knowledge, but also your insurance agent is a huge wealth of knowledge, and your lender can be a huge wealth of knowledge. So anybody that I'm talking to, I'm learning from them, because I know in some way they are my superior, and I try to extract what they know about the industry and their profession much more than I do. The appraisers, I mean, I'm just learning things from them. So it's not something that I necessarily had gone out and saying, hey, I'm looking for this, but I had a mentor one time that told me that opportunities come and opportunities go, but they tend to present themselves best to those that have their houses in order. Mm-hmm. So if you have your house in order and you have your criteria of your minimum standard of what you will accept. For me, I like investments that will produce at least 36% IRR average over time. And because I have my bar set so high, I'm able to filter through. I'm not bogged down with my time or my money being spent on things that do less than that. And I have enough deal flow that's realistic. I mean, I could say I have 1,000,000% IRR as my goal, and I'm not going to find any deal flow, but I have excess deal flow. And that's kind of what I connect my clients with as well. I try to get them to be the buyer so that they can become investment snobs, because there's more good deals than they can really invest as much as they want to in.
So let's talk about the width of your net when you're casting a net, looking for opportunity. I mean, I think that if I can summarize some of the points that you've made, it's more related to like building your network. Right? You talked about appraisers, brokers, attorneys, what have you. Just really building that localized network. But would be interested to know, like, what does that the net look like as far as how far cast out? I mean, is it just Dallas where you're based out of? Is it all of Texas? Is it the eastern half of the U.S., the western? How far do you go to find these opportunities?
That's a good question. So for active income, I like to live where I am investing in active income and active projects like this.
Okay.
Now I've turned it over to a property manager. I can live wherever I want, and it can be kind of set it and forget it, and I can decide whether I'm going to sell it or just kind of keep and hold for a long time. As far as passive investments, I don't. I love the US of A. I love investing in the US as much as I can, but there are some great opportunities that are US based companies that are helping places in Africa, Ghana, Colombia, all over the place, make the world become a better place. So the net is quite wide, and my network does continue to grow. I mean, it really does help that somebody that has an asset that they're trying to sell to investors. I connect investors to them, and that's where the fish hide. I mean, they know other people that are selling investments that need to raise money because they're great at medical tech or whatever specifically they're doing, but they're not good at raising money. And, they like being where the fish hide with the investors. And if I can just naturally match make people that are looking for each other anyways, I get to meet more investors and I get to meet more people that are selling those assets. So the net gets wider and wider all the time. So I am able to get more and more selective and make sure that I don't let inferior deals cross, into my things that even make it to my desk. I try to weed them out before they get there because my filter is so specific.
No, I love it. I love it. And, we got talking a little bit before we started recording about just outside of commercial real estate, some of the private equity deals, some of the companies you've invested in and VC offerings. And you made a comment about number of companies that ultimately have downside risk protected that might have some real estate associated with, but really you're investing in the company itself. I mean, give us a peek into that world. What type of companies are you investing in? What excites you? What types of returns? Where's your bar set in that world? We know it's 36% IRR in the commercial real estate side of things, but give us a peek in if you would.
Yeah. So, just to get to the why, I guess I can back up a little bit and say the reason for it is a lot of people invest with a registered investment advisor and they have 60-40 stock bond split, which maybe even if they're in the S&P 500 and they average 9% a year and inflation averages 4% a year, then you're basically making a net 5% a year. You're just outpacing inflation to where you can have a savings tank in retirement that you can basically whittle down. You're creating a golden goose and then you're killing it and just eating the meat of the golden goose in retirement. And to me, I'm creating a real golden goose that pays those dividends and those eggs. And
a family of golden goose. Let's leave it.
What's that?
I said a whole family of golden goose.
A whole family of them that you get a golden egg omelet every morning. So, as far as when you're really looking at it, some people, if they progress beyond the 60-40 investment advisor, they get into maybe some real estate. They'll start investing in maybe a single family house or a duplex, or, they get a lot of real estate in there. And in the last 13 years, everybody's looked like a genius. I mean, it's been a great time to invest in real estate. But the one thing that most people don't have that are everyday, just good people, are private equity and venture capital. And even people on Wall Street that are all about the publicly traded securities say that you should have about 30% in venture capital / private equity. And that's where the Yale Endowment Fund, the Harvard Endowment Fund, the wealthiest families in America, they have about 50% in alternative investments like that. And people tend to not invest in them because they see them as very risky. They don't know how to invest in them. They don't know where to find those type of deals. So by having those in the portfolio, that's where the biggest growth has been for these companies, and it's where the biggest growth has been for me. And And I've also created a fund because some people don't want to take that big jump investing in a company or two. So diversification is what keeps you more safe. So by having 30 investments, you are more safe. Any one company is too risky to invest in. So I call it the California sushi roll of getting people into private equity, whereas people didn't really eat sushi until they had the non-raw fish version to be their gateway into the real stuff. So I have those options, but some of those California sushi rolls involve like companies that have real estate protection, that is the high floor, the bond note, if you would, of protecting the downside of an investment while they have unlimited upside. For example, there's one that I love to invest in that was attracted over with government money to create an incubator accelerator to create tech companies, because California was having all the fun, and they said, hey, we're going to give you this building. You basically are getting a free building. You can rent it out for whatever you want, which they rent it out for $110 a square foot. They pay less than $1 a square foot after all of their build outs and everything. And they're still getting tens of millions of dollars of checks to make the world a better place. And the big money that they're going to make on the upside is when they're partnering with these companies that they're very selective about. They only take about 1% of the applicants that apply to partner with them to create the next Uber and big level type companies that they're trying to make unicorns. So somebody's getting $110 a square foot essentially for free. The value of that 55-year lease that is about the same value of the valuation of investing into them. So if something went wrong, then we have that real estate to protect us on the downside, but we have unlimited upside. So I look for disproportionate downside and upside. And as Warren Buffett says, don't lose money. Find things that prevent you from losing money. You don't just put it all on black and hope that it does well.
Yeah, I mean, talk to me about the underwriting of these different opportunities, right? I mean, underwriting real estate, it's there's a lot of uniformity there, depending, whether it's a retail shopping center, self storage, mobile home park, Class A, B, multifamily. There's a lot of carryover and a lot of similarities. If you can underwrite one, you could probably within 10 or 15 minutes of additional reading, you could probably figure out how to underwrite the other asset type. But underwriting a business, I feel like there's a lot of additional nuances that exist there. And so, and then now when you start talking about businesses in different industries and a lot of different factors, just help us, the layman, better understand what that world looks like, and how do you vet these different opportunities to decide whether or not it's something you're going to put your own money into.
All right. Well, like as the Maverick himself, Top Gun says, it's the plane. It's the pilot, not the plane.
Yeah.
And I do invest in the pilot more than the plane. On some of these CEOs and fund managers, I want to make sure that they're proven, that they have a track record. I want to make sure I'm understanding the industry, that I'm understanding the need, and as Clayton Christensen, the Harvard professor, would say, like, what are you hiring this to do? What are you hiring this product to do? And I want to make sure that that is something that is a need that needs solving for. And then I make sure that I have the best people that are running that. It's always good having professional, like institutional money in alongside of you, because they have more resources than I will ever have. But there are also specific, more surgical investments that I can make, because the bigger people that are making those investments, they know 90% of their investments are going to fail and the 10% are going to overtake the rest. But there are some niches where we can get in and invest in a company that has a 5-year contract with a Fortune 500 company that needs their software or their product, and they're highly unlikely, almost 0% likely to fail during that time because they're getting funding and whatnot. So I can get in and get out within 3 years, and 3 to 5 times my money in that amount of time. And then I can let the big boys decide if they want to take a risk, if it's going to be one of the 90% that fail or not. I don't have to worry about that. So, and also in that other example that I'd used about the one that has the protected downside on the real estate, they spend 365 days a year working with these companies, deciding if they're going to further partner with them. So whereas a average venture capital investor will spend about 40 hours deciding if they should invest in or buy a company or not. So these guys spend much more time. They know their companies much better than an average outsider would. So you can have inside information very legally. You can find unfair advantages in these private markets.
Given where we're at in the economic cycle, do you find that it's a time for caution? I mean, are there areas within your investment realm where you find yourself being more bearish, or vice versa, being more bullish than others?
Yeah, absolutely. I've always been a little bit more bearish than I should be, as far as there's always somebody telling you that the sky's falling, and they'll be right once in a while whenever there's a recession. But people that always think that things are going to be getting worse, their investments do much more poorly. Whereas people that believe that the long haul and the future is going to be brighter tend to do very, very well. So I personally, I am very concerned with real estate where it is. I feel like it's been hyperinflated, and then the crack of the whip of interest rates going up is a lag of at least about 6 months before we realize how much damage it's going to do. And we have a ton of those that are stacked up one after the next. So I think a lot of the smart money that I've talked to that have, in the level of $500 million to $1 billion or more in assets, they're sitting on the sidelines through 2023 and maybe 2024. They're not making big purchases unless they're finding those obvious niches that you can still find. I think 2025 is going to be probably a lot more of either a question mark or a big time boom to kind of bail out some of the people that have been later to the game. So like I said, there's always a niche to find things, but that's where real estate I'm a little bit more cautious on right now. It will provide the better opportunities. I love that real estate doesn't go to zero, and it can be insured and that kind of a thing. But I'm a little bit more cautious. I'm not as just blindly investing, knowing that everything's going to take off and be the best investment that we've ever made, like it's been in the last 13 years.
Yeah. And I know that you offer some different resources on your website. Tell our listeners a little bit more about that, if you would.
Yeah, there will be more added before too long too, as the book's coming out. It'll actually be there at you can go to ericfrancom.com or theinfinitefreedom.com, and you can actually pre-order my book. I believe we even have a promotion. We might be giving the book away to some people and that as well. So there's also the active keys of freedom, the time freedoms and the money freedoms, where people that are looking to exit their businesses, or whether they're going to stay in there as the owner and let somebody else manage it, or if they're just going to sell it and become an investor and live their dream lifestyle. There are a lot of resources that are free, hours of material that people can go on and check that out at no cost or obligation.
Okay, fantastic. And guys, I'll be sure to put that in the show notes, and that's ericfrancom.com. Is that correct?
Yep, that's it.
Okay, fantastic. Well, Eric, it's been a lot of fun having you. I appreciate you coming on, my friend. Lots of insights that you've shared with us, and it's just been a blast having you.
It has been a real pleasure. Thank you so much, Kevin. I've enjoyed it.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bubb, wishing you huge success. Take care now.